Did you know that if you invested just $250 a month for 35 years at a 10% return, that you would be a millionaire? So make sure to listen to the end because I'm going to give you my step-by-step plan that will make you do just that. So to be honest, I never thought this would be possible. I just thought investing in index funds was so risky because there's going to be higher fluctuations. But I'll tell you, if you're willing to invest your money over the long term, those fluctuations are going to give you the most money overall. So what I'm going to share with you has been my personal experience. So this is your disclaimer. I'm no longer a financial advisor. I am now retired from that. But this has been my experience that I'm going to share with you step by step. So if you're a beginner investor, you're just starting out, you're thinking about investing in index funds, I'm going to go over some commonly asked questions. So the first one being, do you need a lot of money to invest? So you do not need a lot of money because what you can do is you can actually just invest in the fund month by month. So you're going to budget yourself an amount every month or every 2 weeks or however. This amount will go directly into the index fund. Is it better to invest on my own or with a financial advisor? So in my personal opinion, I would invest on your own, and I'll tell you why. Because overall, you'll save yourself a lot on fees. Because the average financial advisor will be wrong and make about 2% less on average on the average return of a fund. So you're going to get a higher return if you invest your money on your own. So what are equity funds? So equity funds are basically a basket of investments. So for example, the S&P 500 is the 500 largest companies in the US. And you can buy an equity fund that invests in the S&P 500. So you'll be well diversified because you're going to be owning 500 of the largest companies. So will you lose money or all your money if you invest in an equity fund? So an equity fund, the goal is to invest your money over the long term. So 10 years or more. Now in the last 20 years, if anyone has invested in an equity fund, they did not lose all their money. Now at times where you could lose your money is if there's years where the fund is down and your account is below what you invested. There could be a possibility if you needed to withdraw that money that year, then yes, you may take a loss. But if the goal is for you to leave the money in there over the long term, you will not lose your money. The only way technically you could lose all your money is if, for example, in the S&P 500, all the 500 companies failed, which is impossible. So what will happen is some of these companies may fail and it'll get rebalanced and the companies will change. So this will happen automatically in your equity fund if it's invested in the S&P 500. So should I invest all at once or just a little at a time? So investing all at once is more risky because, you don't want to market time the market, but you could be entering at a time where you could be paying more. So overall, if you want to take the least amount of risk, you want to enter a little bit at a time. That will give you the most value with your dollar cost averaging. Now, the millionaire secret is to invest when you're young and let the compounding do its job. And people may think, I need to save $1 million in order to get $1 million, but people don't realize you only need to save and invest a small portion of that in order to get that goal. So if you're liking this video so far, make sure to click the like button because it's going to get to more people just like you. So what's the difference between an index fund and an index ETF? So an index ETF or exchange traded fund can be bought and sold during the day on the exchange. An index fund can only be bought at the end of the day. Can I invest in the S&P 500 index fund if I'm not in the US? Yes, you can. There's multiple ETFs for Canadians that can buy index funds without having to pay the exchange fees. Why do so many people fail investing in the stock market? So I believe people fail because they go in it with the intent to win big. Now, the successful people that make money in the market usually will go in for the long term. They stick with their plan. They may also buy a stock because they hear that it's going up. So they buy at the top. And then when it goes the other way and it starts going down, then they're scared because they're losing money and they sell. So that's the exact opposite of what you should be doing. So what type of equity funds should you buy? So my personal experience has been buying equity ETF funds, and there's 2 Canadian and 2 US versions I'm going to share with you guys next. And these four funds invest in the S&P 500. So for my Canadians out there, there's 2 equity ETFs that mimic the S&P 500 I recommend. So the first one is Vanguard's VFV, and the second one is BlackRock's XUS. They can both be invested with Canadian dollars. Both have very low management fees of 0.08% and have averaged 14 to 15% annually. And for my US investors, we have Vanguard's equity ETF that mimics the S&P 500. Their symbol is VOO. This one has a management fee of 0.03% and has averaged an annual return of 13%. We also have BlackRock's version IVV. Its management fees are also 0.03% and its average an annual return of 6%. And Vanguard's VOO hasn't been around as long, so their returns are higher. So it's easy as that. So I would love to hear, what type of equity funds will you guys be buying? Are you going to buy into the S&P 500, into the NASDAQ, into an ETF, mutual fund? Let me know in the comments below. I sure hope this was helpful, and please make sure to click the notification bell so that you can see all my future videos. And I will see you guys next time.